Hey folks, Dan Frio here. The bank, just to let you know, banks have closed. The markets have closed at this time for observance of the 4th of July weekend coming up. So I wanted to go over the economic news we got today, some of the expectations we have over the next couple days, the tariffs, the tax bill, and all that other stuff, and how that might be affecting these things over through here. So if you got any questions, please throw those out here. And I'd love, today I'm urging participation. And you guys might be off for the day. There might not be a lot of people here, but if you're still at work and you need something to do, hopefully you're tuned in. So join us in the conversation. So as I usually ask, please give me a thumbs up if the video's good, and then a secondary one, just thumbs up if the audio's good as well. So let's get over to it. Folks, I didn't forget about these things. I'm getting a lot of comments from you guys saying, hey, Dan, you know, we still have a huge deficit, and you don't bring it up anymore. Folks, I bring up the deficit all the time and tax spending and everything else, so I'm just like you guys out there. Just here, let me do a favor. Just to kind of pull the curtain back a little bit on who I am and what do I do before we really get to this content, because I want you guys to know who I am and where I come from. Okay, so I'm not some multi-millionaire that's mega. You guys, I came from a small town in West Virginia, okay? It is Fallsby, West Virginia. Population back in 2020 of 2,853. My father worked at Weirton Steel. He worked there for 30 years. He was a foreman there, and we lived a modest lifestyle like a lot of people did back in those days. If you want to take a look at my town, you can see right through here, it's mostly industrial. It was steel mills, coal mines, and that's what it consists. That's what Nippon Steel, the one that's buying out U.S. Steel right now, is located right over through this area. But here's basically downtown where I grew up. It's right through here. Take a little glimpse of that. So if that looks like a multi-millionaire town to you guys, okay. But so that's what I am. I went to school. My parents put me through college. I was the first child in my family to finish college. Got a degree, moved to Chicago, wanted to get at the Board of Trade, couldn't. And I got in the mortgage business, and I used my economic skills, I guess, or education to help me learn a lot of this stuff so I can help at least possibly explain some of this stuff to you and how it works and how all this ties into things over this over here. So we talk on this channel mostly about real estate. We talk about interest rates and programs because I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states. So if you're out there and you'd love to use my services and use my 35 years experience, put it to work for you guys, I'd love to work with you as well. I'll give you all my information at the end of this video. I do have a slogan. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. So let's put that aside for now. Let's get to this and what you're here for. So what we heard today. Now, yesterday what happened with the big, beautiful tax bill right through here is it looks, well, last night it didn't pass when I went to bed, and they worked wee hours in the morning on this thing, and I think it was like 3 o'clock in the morning, 3:30 a.m., and they finally, I think, got a resolution to this, and it looks like it might be passing. We're going to go through. I did a chat GPT to scan this stuff. Okay, so folks, I'm not a proponent of cutting all benefits. I'm not a proponent of cutting, like SNAP benefits. I've had family members, especially from the town that I grew up in, I've had family members on SNAP, and it's a fantastic program. A lot of these are. But once you start getting all the abuse of some of these things, and we're going to go over that in a second, you go through here, look at the abuse. There was $14.6 billion in abuse just found recently, and I just Googled this today. What is Medicare abuse? You got, what's this? 2 days ago, 12 charged. Over through here, 5.4 million charged there, 17 charges down here 8 hours ago, 11 hours ago, 2 people in Dayton got hit for fraud. There's a huge amount of fraud, folks, out there. So let's see, hopefully all this big, beautiful tax bill does help us. We'll go over it here in a second. We're also going to talk about tariffs. Over the last couple of days, more and more tariff deals have come in, and a lot of people were asking me, Dan, you don't bring up all this tariff deals. Well, folks, we don't have all the data yet. Okay, as the data comes in, you have to compile that data to figure out, what's the resolution? Is it good? It's bad? Where my stance are on it. I'm not going to go out there and just give predictions on what might happen because a lot of things are changing within the last 24 hours. Look at the last 30 to 60 days, the changes. So hold back. I did say today would be basically obviously a rocky ride in the markets because we had the good news when it comes to the jobs report today. You see that right through here. Here's where jobs were in June. More jobs were created than was expected. A good jobs report is about 150,000 jobs a month. When you get 147, I'll say it's okay. It's good, but it was a lot better than expected because people were continue to say, well, between tariffs and everything else, we're going to have unemployment spiking as well. So we have yet to see that as well. So you go over to here, and we finally got the pieces of the puzzle that the Federal Reserve monitors. Okay, so here's what we're looking at. Here's the Federal Reserve, the rate they control, and hopefully you understand this if you follow my channel. But then we're going to look at these things. And all this data came in within the last 2 weeks. And this is what the Federal Reserve looks at. So on their point, if you look at this data, you might say, well, it doesn't look too bad. So let's go through it and don't take, maybe let's get out of our bubbles for a second and look at this whole country for 1 second. Let's just take it as a glance, the economy at a glance. Okay, so you have the PCE. This is inflation. Well, the inflation measure that the Federal Reserve monitors. Okay, it was at 7%, 7.2, how they measure this. This is the PCE, not the report that you and I see a lot of times where it's like inflation was 9, 10%. This is the PCE, which you're probably referencing as the CPI. So that's the Consumer Price Index. This is the personal consumption expenditure. So this is what the Federal Reserve monitors. We're at 7.2 in June of 2022. So within 3 years, we went from 7.2 to 2.3. Pretty darn good move. Okay, so they want this at 2%. Well, it'll be there shortly. You can count on that almost. With a lot of the housing data we have, but with the uncertainty on tariffs, taken out of this will go below 2%. So then we got the unemployment rate. This just came in today. It actually ticked down. It ticked down. I don't think they upgraded this just yet. We'll go to the economic calendar. But this actually just ticked down, shocking a lot of analysts because they thought it was going to go from 4.2 to 4.3. It actually went from 4.2 to 4.1, so that ticked down. GDP, we're going to just exempt this from now because all the tariffs and everything else that's transpired through this, we will be in positive territory for our GDP for the year. So that's what we're looking at there. So the news that we got today, here's the markets are liking this. We got the Dow Jones up again 300 points all the way across the board. Look at the session that we have today. Basically, it's a Goldilocks scenario across the board right through here. You go over to the VIX. The VIX is still down, going down. This means anxiety or the blood pressure on Wall Street just went down a little bit more. Let's check out oil because you know how I feel about oil. Oil is down. We wanted to go below 65, but we'll take it down. At least it's below 67 right now. And let's see what cryptocurrency is doing. 109, it was 110, I think, yesterday. So that's rolling pretty darn good. MBSs, when we look at the mortgage bond, so if you don't have the ability to watch mortgage bonds, the MBS market, because if you really want to focus in on what's going on with these things over here, you really have to know what's going on in the bond market, okay? So a lot of the data that we go over on a daily basis is going to go over just exactly the data that's going to feed over to the bond market, thus creating your mortgage rates. Okay, so all this economic data does play a role in bonds. What you usually see is you'll see the 10-year Treasury. So if you don't really know what's going on with mortgage rates, all you have to do is this. Now, this is a perfect example of what happened today. Okay, we had the jobs report coming in today, and it was better than expected. Okay, all the markets first anticipated, they're like, oh my God, this means now the Federal Reserve is not going to cut for sure because the jobs market even got a little bit better. Well, because of limited trading, a lot of people not in the markets, they're on vacation. You're going to have huge reactions. It just happened this morning. Right through here, the bond market just plummeted. And then we skyrocketed. Okay, well, the flip-flop way, and I'll show it to you over in this section right through here. So here's what happened in the bond market. It is down or up 6 ticks. So if you look at that, you're going to say, okay, well, most likely then mortgage rates are going to go up. Well, it usually works that way, and that's kind of how you can look at it. But you have to really, to understand what's going on with mortgage rates, We follow the mortgage bond. So here's what you saw this morning. A huge overreaction, and it went all the way down to here, actually. This is a better way to show it. And then it came right back up and started to stabilize. Now, this might seem like a huge move. 20 points is. If you go over to the markets right through here, how did it affect rates? Let's refresh this real quick. It went up 0.02 today. So a lot of these deviations don't, they might seem huge on these charts, but they're not as big of moves as you can, usually see if this chart was broadened out. So that's what you see right through here. Okay, so now here's what we're also looking at. The Federal Reserve Chairman Powell, he came out on July 1st, and he basically said it to the world because he was in a European conference. He said, well, if it wasn't for tariffs, I'd be cutting rates. So that's what he specifically said. So now as the tariffs come in, and the Federal Reserve looks at this data, and let's just kind of paint a picture of this before we go to next week's data. The Federal Reserve is going to look at this, and they're going to say, okay, the tariff uncertainty's there. Well, if we go back and look at the data that we need to focus in on, we just got a brand new reading on PCE and some other numbers that came in, and the inflation numbers are looking pretty darn good. We still have the shock and awe of what's going to go on with tariffs, but until we know that, what's going to go on there? Yeah, the unemployment rate, this will be refreshed on Monday or Friday maybe to 4.1. So unemployment went down. So if you look at this economy, it's pretty darn good. So the Federal Reserve is saying, well, why should we cut? Well, that's another reason why you should cut. The economy is going pretty strong, even with all these uncertainties that we have. So let's just assume that tariffs aren't as bad as we expect, and they're not going to make inflation skyrocket and the unemployment rate skyrocket. What would happen? Well, we might get back to normal times. So let me give you some tidbits on that. On normal times, here's what you normally see. You see the 10-year Treasury. To figure out what mortgage rates would do, you would take a 10-year Treasury and you'd add, on the high end, 1.75 to that number. Okay? So you add 1.75 to this number now, what do you get? 6 point something. So 6.1. Well, we're at 6.7. That is basically the risk premium. So that can be sucked out of this whole equation. So we could be down at 6% rates and sometime soon. It could be faster than we think. But if a lot of these uncertainties go the other way, to push a lot of this stuff the other direction when we go over to what the Federal Reserve monitors. So let's say then the tariffs do go through and they're really inflationary and they really start kicking in the next PCE reading and then the future CPI and PPI. Let me explain those acronyms to you if you're new. The CPI is consumer inflation. The C on the front of that means consumer. So that's what you and I focus in on. PPI, you're going to start hearing readings on PPI. The P on the front of that is producer inflation. Okay, so the Federal Reserve, they use a system called the PCE, the personal consumption expenditure. It's kind of a combination of a whole bunch of things. So I don't really focus in on that. I focus in on the PPI and the CPI. So that's basically those things explained and how those numbers go. So let's say all this stuff skyrockets. Well, then the Federal Reserve is going to say, well, no, we're not going to cut rates. We might actually increase rates to cool everything down, or this inflation front. They'll be in a much bigger pickle at that time. So until we really have clarity, I can't really tell you what's going on. And a lot of people want to know exactly what's going on next week or so forth. Here's the best analysis I can give of you. Okay, right now we have a car. This car isn't working very well. But the owner of it is saying it's not working well, and I really want you to fix it, but you can't look under the hood. Well, how in the world can I fix it unless I look under the hood? Well, that's kind of what's happening right now. We're trying to make all these predictions, and everybody's trying to do it, and they're complete guesses at this point. And whoever guesses right, they're going to be on the front of the headlines and so forth. But right now, I don't know what's going to go on. I don't know what's going on with your car until I really look under the hood. Meaning, I can't really tell you exactly what's going on with all this stuff until we get a lot of information that we should be getting in the next couple weeks. That information is going to be, is this big, beautiful tax bill going to go through? And I'd like to go over that with you guys for a second, just because I did a chat GPT, and I want myself to have clarity on this as well. So I don't want to just come out and say, this is the best thing since sliced bread. I give you talking points that help me. like the SALT tax, and if you're in New York or New Jersey or parts of the country that have really high home prices and real estate taxes, this will benefit you. And you don't have to be a multi-millionaire for this, but there are some concerns in the tax bill, and I'm going to call it as it is. So here's what the tax bill is, and we're just going to summarize all this. Then I'm going to conclude with next week's economic calendar, and then I'm just going to bid you a farewell for the 4th of July holiday, so you guys can get out there and start cooking. So let's get over the big, beautiful tax bill as quick as we can, just to hit some key points that the AI system pulled up for us. So the 27 tax extensions are permanent, so let's not even go into that because they're already here, they're in place, nothing is going to change. New deductions. Do you earn tips? Do you make overtime? Do you have a car loan? It's going to help you. Okay, you can probably get to write off your interest on your car loans. That'll help in the SALT tax. Okay, that's part of that. Overtime. If you make overtime, you won't have to pay taxes on the overtime or tips. Okay. Increased child tax credits, $2,200 to $2,500. Benefits. Creates Trump account. Every person born in the U.S., natural birth, gets I don't say nothing, but you understand what I'm saying, get $1,000 at birth. It raises the SALT deduction right through here. This is going to help. This is going to help a lot of people, folks. Now, here's where it really gets dicey. Okay, Medicare cuts. The first thing everybody's going to say is this is for kids and elderly. I get it, but there's a ton of abuse in this as well. So why not have somebody, I don't care who it is, go in and analyze this stuff. You go through a forensic audit, just for say. Figure out all the details in here, because I just showed you a snippet on a Yahoo finance channel that had 6 articles of Medicaid and Medicare fraud abuse, and one was $14.6 billion. That's a lot of money, folks. SNAP benefits. I'm not for, is it going to get shifted back to the states? Maybe that's how it should be. So the federal government doesn't have to pay for all this. I'm sorry, that just skipped over there. Student loan relief rollbacks. I mean, you know how I feel on student loans. I mean, you took out the debt. You sign the papers every semester, and you took those classes. Maybe go after the colleges. If you think you got duped, maybe we should go after these colleges just to say maybe our people aren't getting their money's worth. Maybe that's the way that we can go about that. Fund cuts for clean energy and Planned Parenthood. I'm not even going there. That's opening a rabbit hole. Clean energy, defense. Do we need more defense and ICE and things like that? That's huge controversial. I won't go into that as well. And the fiscal deficit, nobody really knows. And the one thing that a lot of people are missing on this too is the tariff are going to bring in a lot of revenue as well. And the first thing people are going to come back is saying, well, yeah, that's going to make prices for us going up, and thus making costs go up and inflation go up. Yeah, it might be a roundabout circle, but we also got benefits from the tax relief. So let's just wait and see how all this plays out before we try to predict kind of what's going on with this. And everybody keeps saying that housing crash. I've been saying housing market's not going to move for the last, basically since 2022. So has your market crashed? Has your market been stabilized? Who was right there? I've been calling rates at about 6.5% for the last 2-3 years, and we're pretty much stabilized there. So hopefully I can prove to you a little bit that I know what I'm doing in real estate, because I've been doing this. I've been a mortgage loan officer for 36 years now. So that's what I do for a living, and I love doing it. So let's get over to the rest of this data. So here's what we're going to look at for next week. Not really much data coming in for us next week. If you go through here on Monday, July 7th, there's only nothing here. Tuesday, consumer inflation expectations. I don't care about the expectations. Consumer credit, API, nothing there. Crude oil inventory, Atlanta Fed, GDP, and we're not really going to face that. So then on Thursday and Friday, this is where the meat of the pieces of the puzzle come with the Federal Reserve's monitoring. They're monitoring right through here, continued jobless claims and initial jobless claims. But we got the federal numbers today, and the jobs numbers are looking pretty darn good so far, because the unemployment rate actually ticked downwards, meaning more and more people haven't lost their jobs. So let's get over to the CME FedWatch tool. So in 26 days, has any of this data in the last couple of days changed what the Federal Reserve might do at the next couple meetings? We'll go to the probability, and right now, yes, it did. This actually actually spiked up to 95%. I don't think that was 95 this morning, but we still have a 65% chance at the next meeting in September the Federal Reserve will be cutting. So let's get over to one other thing. If you guys ever follow me on Stock Talk, I do. I'm actually a federally licensed loan officer. You know how we go that spiel, but I also help people or help you. Here's my goal. I want you to understand how to get out of Fallsby, West Virginia, or the section wherever you are right now. And I'm not bashing Fallsby, West Virginia, but if you want to, try to learn more about investing and try to help in wealth creation. I also talk about stocks, bonds, and ETFs. So check out Stock Talk Tuesday, where we talk about stocks and bonds. This week we added a defense ETF in here, and the reason why is President Trump, when he met with NATO, they all came in with an agreement that NATO would increase their defense spending to up to 5% of their GDP, and that's supposed to bring in, I think it was like $600 billion a year in defense spending from all these countries. So we looked at this, and just so far, we bought this into this position. When was it? On 7/1, and we are up, 1% in the last day or two. So that's that piece of it. And then lastly, folks, my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I'd love to win your business if you're out there looking to buy or refinance. Okay, we have a slogan here. Here's what it is. It's one application, one credit pool. We're going to shop your loan over 30 different lenders. So if you'd like some assistance with this, just go to my website and you can find all the information you need there. How we do the one application, one credit pool, and shop your to 30 lenders, it's pretty simple. We're actually a big mortgage brokers as well with a federal license. Very odd. There's only a couple countries in the whole country that are doing that. So I have 32 other lenders that we work with. I can offer you their rates, their programs, and even niche programs like this. This is a $7,000 or up to $7,000 grant if you're looking to buy a home. So check out and see if you qualify for that. If you're on here and you've locked in a rate lately, or you're rate shopping, you want me to take a look at the best rate that you have, I'll upload it right through here. This is the loan estimate review. You upload your loan estimate, and I'll actually send you a personalized email back with a video going over those numbers with you. So if you guys have any questions, comments, or anything, I'd love to answer anything else. If you want to talk about the big, beautiful tax bill, if you know a little bit more about that than I do, or if there's any other questions that you might have, I am here to answer, because this will be my actually live event for today, as well as my closing bell. So that is it for today, folks. Thank you so much for watching. I hope you learned something today from the channel. I hope you have a safe and prosperous 4th of July. God bless. Be safe out there, and I will see you back here